Hello, everybody. Brian here from quantlabs.net. Today is February 21st, 2:10 Eastern Standard Time. I just want to talk about something that could really pivot the crypto market into a positive direction. Remember when crypto really first collapsed, it was China when they banned crypto. That was the first step that started the big decline in crypto. So I've got two articles here. One from a website called cryptodaily.co.uk. The headline is Hong Kong outlines plans to let investors trade digital coins. Uh, so the other article is the Straight Times, which is out of Singapore. As you know, there's a big crackdown in US, but this is from the article. Hong Kong has outlined a plan to let retail investors trade digital coins or tokens such as Bitcoin and Ether in consultation paper published on Monday. Regulators said individual investors would be allowed to trade larger coins on exchanges licensed by the Securities and Futures Commission. I guess that's Hong Kong based. They added only amid safeguards such as a knowledge test, risk profile, and reasonable exposure limit. And basically, they say coins should be included in at least two acceptable investable indexes from independent providers, which one should have experience in the TradFi sector, what's traditional finance. And the really big one, so that sounds like a monopoly to me. The only two exchanges permitted to operate are Hashkey and BC Technology Group's OSL Burst. So that's kind of like a near monopoly, I guess better than nothing. Bitcoin and Ether are the two coins with the largest market capitalization. They will be listed by Hong Kong platforms. So this is a big deal now, at least for Bitcoin and Ethereum. Yeah, if you have not watched my CBDC video behind a password protected post, yeah, I get onto that. You'll see some of the options for decentral exchanges. Actually, the big one, Uniswap, is growing much faster than the others and is getting as big as Coinbase. So do keep that in mind. Uh, Here's the big news. So mainland China has severely cracked down on crypto, but seems to be taking a softer approach to Hong Kong's aspirations of becoming a crypto hub. Because a lot of the cities are now trying to vie to be the new crypto hub. I've been reading, Dubai's trying is in on it, London, and now Hong Kong. Now so there's an article on Bloomberg indicates that representatives from the China Liaison Office have been making frequent trips to Hong Kong crypto meetings to understand the city's plans. Officials have reportedly been friendly regarding the matter, which is being perceived by local crypto businesses that Beijing may be open to using Hong Kong as a testing ground for crypto. So that's the first article. Now, this is the Straight Times. Uh, Hong Kong plans to let retail investors trade larger crypto tokens like Bitcoin. So that's the headline. So this is the key. Individual investors, retail investors, will be allowed to trade larger coins on exchanges licensed by the SFC amid safeguards. So this is a repeat. Just look for anything other than from the previous article. Okay, so the consultation period will end on March 31st, and the objective is to allow retail trading in new licensing regime for crypto exchanges due on June 1st. Bitcoin and Ethereum, the two biggest digital assets by market, are likely to be listed on the Hong Kong platforms I mentioned earlier. Uh, here's the goal. Okay, so Hong Kong at the end of October pivoted to pro crypto stance, part of a wider effort to restore the city's credentials as a financial center. So let me repeat that effort to restore the city's credentials as a financial center. So I interpret that as saying instead of we rely on traditional means of growing and being a financial center, we're now pivoting to focus more on crypto, obviously Bitcoin and Ethereum, and that's the future to be a financial center. Officials are aiming to learn the lessons of last year's 1.5 trillion digital asset route and a spate of global bankruptcies like the collapse of FTX. I mean, that was a scam. We know that. To create a mandatory regulatory framework that can woo firms and protect investors. Consultation paper did not specify particular crypto indices as a reference point for taxonomy of allowable tokens. The onus will be on the exchange to monitor listed assets to ensure these qualify for trading by individual investors. Fair enough. Okay, so um, the government has already allowed trade exchanges investing in CME Group, Bitcoin, and Ether futures. So if you're a futures trader legitimately on the CME, there you go. Digital asset executives are increasingly being drawn to friendlier policy stances of places like Hong Kong, Dubai, and Europe. In Europe, I don't know. As crypto probes in the U.S. cloud, that country's position as an industry heartland. Now, one thing I've talked about Binance. I do know they're officially headquartered in uh, Dubai, so that's a big deal there. I mean, despite their problems with the U.S. So we got Cameron Winklevoss, co-founder of crypto exchange Gemini, tweeted on Sunday, this is his working thesis. The next bull run is going to start in the East. I agree. Coinbase Global Chief Executive, Coinbase Brian Armstrong has alluded to Hong Kong as the jurisdiction now to lead digital assets. I agree with that. Also, we have Justin Sun, the guy who is behind Tron, and that his crypto exchange Huobi Global is applying for a trading license in Hong Kong. Yeah, because he took over Huobi uh, and launching a new trading venue there. The new crypto exchange called Huobi Hong Kong will focus on institutional investors and high net worth individuals. So there you go. Um, Hong Kong's ambitions still face obstacles. Downturn in the virtual asset has been thousands of job cuts. We know that. Crypto markets have partially rebounded from 2022's bust. I agree with that. So there you go. Good news for crypto from Hong Kong, sanctioned by two American heads of exchanges. I don't like either, but doesn't matter. That's a good sign that they see growth there and credible institutional growth. Now, that's all fine and good. So let me talk about my situation. I've just basically on my two blogs, websites, quant-labs.net, I've trimmed back 90% of all the content. And the big one I've trimmed back was from 28,000 posts over the last 10 plus years on quantlabs.net/blog. We are now trimmed it back all the way down to 1%. So now the article is going to be a lot more unique, a lot more uh, SEO friendly, we'll call it, search engine optimization friendly. And a lot of these articles are going to go through a recycling plan where they will be tested on Google through a service I'm part of. If they're not SEO friendly, they will be deleted from both websites probably after a week or a couple of days. So just to let you know, that's the way I have to keep the websites healthy. Um, and we'll just leave it at that. And also, and I continue to stress quantlabs.net/books. I've got quantlabs.net/banking if you want to know how to really control uh, or create your own bank. I'm going to be doing another one for the CBDC as well because that's going to be a lot more current, much more relevant. CBDC is probably the biggest threat for everybody out there in the investment world. So probably for now, just join quantlabs.net/books to get the PDF on all the trading tech secrets. And you can do that and just get on my list because I'll be pumping out a lot more, like I said, higher quality content um, as I've trimmed back a lot of the older content that was plaguing the performance of the websites in the eyes of Google. Other than that, thanks again. Again, that's quantlabs.net/books. So join there. It's going to be a fairly exciting period now as the markets are not looking good, but crypto, I definitely say brighter days are ahead for crypto, especially for both Ethereum and Bitcoin. Or, yeah, there you go. Have a good day. Later. Over and out.